Hi everyone, welcome to my second video. I hope you have seen my first video on what personal wealth or net worth is. If you have not, I would highly recommend you watch that video first to understand the concepts before proceeding with this video on building the tracker template. The link of the first video is in the description below. As a recap, this is a super quick snapshot of what I have shared in the first video. Before I begin, I would like to emphasize that the key to this tracker is to ensure effective and yet simple tracking so that you would find it easy and not be discouraged from maintaining the tracking in the long run. Here is a simple summary of the tracker template based on assets, liabilities, and short-term, long-term categorizations. I would go into the detailed template in a while, but basically we will have two main parts to this template: assets and liabilities, with short-term and long-term categorization for both asset and liability. There will be further breakdown into the different types of assets and liabilities. For assets, cash and investments are short-term assets, while EPF, car and property are long-term. Credit card is a short-term liability, while the three types of loans are the long-term liabilities. I'm going rather fast here since these have already been covered in the first video. Most importantly, this is the financial net worth, which is total assets minus total liabilities. Please remember this formula. Moving on to the detailed tracker template. This tracker should be done in Microsoft Excel to ease manual computation work from your end. I will cover three things for this template. Number one, I will go through the sections of the template with you. Number two, I will share how do you obtain the values of each of the assets and liabilities. And lastly, how do you compute your financial wealth or financial net worth growth over time. Let's start with the template. This is a sample template for, let's say, 1st of January 2021, and all the amounts stated is in Ringgit Malaysia, and they are not real numbers and are made up solely for the purposes of this example. This part of the template is asset, and I have blue highlighted the sections for the categories which I have shared earlier. This is cash, investments, which sums up to short-term assets, I hope you remember, followed by EPF, car and property being long-term assets, and this is the summation of short-term and long-term assets. For liability, credit card is the short-term liability, and the three types of loans are long-term liabilities. Short-term plus long-term would be your total liabilities. And finally, the financial net worth, which is the total assets minus total liability, would be the final number that you will be looking at. So let's go back to the top. We'll start with cash. As mentioned in my first video, cash can be held in different forms. Cash in your wallet. You may ignore this if you hold minimal cash, as we are moving towards cashless payments these days. Savings accounts and fixed deposits, which you may hold with different banks. You just have to list down the banks that you have for savings account and fixed deposit. You may ignore the minimal amount balances that you have. If you notice, there are a number of cells which are highlighted in gray, and these are the cells which you have to fill up whenever you update the tracker, and the rest of the cells which are not highlighted are actually the addition formulas. Just as an example, your savings account for these two banks would add up to this 10K savings account, and this subtotal for cash is just an addition of these categories. Moving on to investments, I've only listed stocks and unit trusts here as an example for simplicity. You may include more lines for your other investment types as well. Feel free to do it. So for the rest of the parts, investment, long-term assets, and liabilities, what you need to do is basically just fill up the ones in gray, like I mentioned earlier, and everything else will auto-populate. The next question you may have is, how do you get the amounts to fill up this tracker? For short-term assets, they are simple. Count the cash in your wallet and refer to the bank balances for your savings accounts and fixed deposits. For investments, stocks and unit trusts should be valued at current market value and current NAV respectively. For EPF, please refer to the e-statement in KWSB website. And for car and property over here, I have highlighted them in yellow as there are different ways of valuing them depending on your preferences. I would say there are two options. For car, it's simpler to just use market value based on the car insurance policy. You may also opt to use the expected sales price in the market, which may be more difficult to determine. As for property, it's simpler to use purchase price, but you may opt to use the last transacted price for a similar property in the BRICS website. Another scenario for property is that your property is currently still under construction. In that case, your property asset should equal to your housing loan amounts. Please bear in mind that both car and property valuations are very subjective based on the age, condition, finishing, and market condition. Personally, I would avoid trying to figure out the exact value of these long-term assets. If you want to track the exact values, by all means, go ahead, but I would suggest you to find an efficient way to determine these values so you don't stop tracking midway due to it being too tedious. For liabilities, the values are straightforward. They would be the outstanding amounts based on the credit card, housing, and car loan bank statement, as well as the e-statement from PTPTN website. And finally, how do you compute your financial net worth growth over time? To do this, I have included more made-up numbers for 31st Jan in these two columns. This would be 1 month from your earlier data of 1st Jan. The amounts in blue are the amounts which I have changed slightly for this illustration. And for each area of the key component, do add one row for growth amount and percentage computation. This will allow you to see whether you have positive or negative growth and by how much. The formula for this computation would be, let's say for short-term assets, this would be the new amount, which is the 31st Jan amount minus the January 1st. And this is your growth, which is positive. And this percentage would be the difference divided by the old amount. Okay, so what you need to do is just basically putting in this row in each of the key sections with the formulas for dollar as well as the percentage, and you will see which section you are improving and which section you are actually degrading. And finally, on your net worth, what is your improvement or degradation for this particular period. So in this example, it would be a 3.8k improvement in ringgit terms and 3% improvement for the same period. One concept that you must know and remember is that wealth increases when your asset go up and liability go down. Okay, if you look at this example, your asset improves by 1850 while your total liability actually decreases 1900. So your financial net worth actually improved by 3750. Okay, this totally makes sense. Okay, the only thing that you have to kind of like remember is that your liability does show a negative sign, which is different from the assets and your financial net worth. Okay, lastly, net worth tracking should be done regularly, at least monthly, so that you have time to react and take action to improve whatever degradation that you have, or if you're not up to the expectation or goal that you have set for the year. Alright, that's all I have for this video. I hope you find this useful. If you like the content, please like the video and share to anyone who may benefit from it. Thank you for watching.